Hi, this is Brandon from Galaxydoc Market. It's about, I'm re-recording this video, but it's approximately 2:40 a.m. This was recorded a while back. We had some problems with the audio, so I apologize for that. But I didn't save the master file, so I have to redo this. But probably better the second time around. So the title of my video is What's Next for the Stock Market? How High Will It Go? It's May 7, 2024. It is approximately 2:20 p.m. Here's the disclaimer. Pause it, read it. If you agree, please move forward. So the question I posed was sell in May and go away. I said not quite at the weekend video, but now I'm saying we're getting close. We are close to the inflection point, and that's what this video is all about, and this is what we're going to be discussing as we move forward. Okay, so on the news front, Disney just had their earnings, and it's one of the worst earnings they've had in a while. More importantly, it shows that the consumers are dead. And especially with their Disney Plus subscriber growth is non-existent. And that means that the consumers, I've been saying this for a while, that they're tapped out. Their credit card bills are maxed. They're buying things that basically rely on their survival, food, essential items. They are not splurging on going to the woke amusement park and basically spending hundreds and thousands of dollars amongst millions and millions of people. Okay, so they're not doing that anymore. And so Disney is the microcosm of the consumer deterioration in this market. And then, of course, we have the surging distress in CRE, commercial real estate loans. And so they're repurchasing delinquent multifamily mortgages. And so these are related to the home builders and the cracks that are, again, continuing to appear in middle income family households, right? Consumers are tapped. Now, let's look at the fear and greed indicator. Realistically, nothing has changed. There is still fear in the market. We haven't gotten into this extreme fear level, but I think that's up and coming shortly. After this dead cat bounce or this reflexive bounce is done, and I think that's where we're going to go. And this is going to set up a stage for a nice summer rally that is to come. And that's another video for another time. Now, I do want to go over quickly about this put to call ratio. This is from from this weekend's video, and we have a little uptick in the put buying. Okay, nothing really significant. We're still within this range, but what you are beginning to see is that people are beginning to nibble at these levels on some protection to the downside. Okay, and then our McClellan summation index, the MACD has crossed over. We are breaking out into this. The volatility box, what I call it. And basically what it is doing is it's poking out, and that's coincident to with what's going on in the marketplace. This is about 1 day delayed in some cases for the data, but we'll see something like that coming in the coming weeks. So MACD cross is bullish, and that pretty much foretold what was coming on this bounce for this relief bounce a couple weeks ago. And then we're basically going to start finishing up towards the tail end of it. Okay. Now, we are at significant inflection point on ES, and that means that 52.25 to 52.35 is what I'm looking at. And so if this is all you were looking for, then you can pause the video or close the video and move on your way. But I believe this is where either the market is going to just blast higher from this point, which I don't think probably is likely, or we're going to have a pullback. Remember, we are in a range bound situation, somewhere between 52.50 all the way to the gates of hell at 49.68. This is the range, folks. It's big, it's wide, and that only happens on a market that's in a corrective phase. This is a major overhead resistance, okay? So we basically want to understand what that means. It means that the inflection point means watch out here, look out, because this is a point in which a change of direction can occur, or if you're a bearer and you're looking to short, we can basically continue to move higher at these levels, but this is a significant overhead resistance, and this is an area, low risk area, where you know you're wrong at 52.50. Okay? So let's look at some charts. Okay, and let me bring that in. And let's look at the charts. So let's look at the VIX right now. And then the VIX is basically at this point continuing to go lower as predicted. And I think we're going to start finding some support right into this gap area. Okay, so maybe a little bit lower and then we start bouncing. And so be careful if you're going to go blindly go shorting this or you're thinking that this is the top. You know, you want to use pilot positions and then you want to be prudent about your entries. But regardless, we're at the tail end of the range. Could it go down into this 1251 level? Possibly. Anything's possible in this market, but we are at the inflection point. All right, let's look at real quick where the 10-year Treasury is going. The 10 TNX basically is at finding support right at this longer term trend line right here. And so we may be beginning to see a bottoming effect. Remember, I told you the Fed wants to take this to 42.5. I don't know if it actually gets there, but in the interest of saving the banks and, you know, the economy is not doing well, that's what they're going to do. Let's look at the SPY real quick. So what I'm talking about is this is the inflection point, the red area. I think it's very possible for this to pop and even test out this area, okay? Because in order for this to be bullish, we need to close above this breakdown candle right here. Otherwise, we got some black candle formation. We probably going to poke into there, and that's what I think we're doing, and then it's going to come down. There are gaps everywhere here. There's gaps all the way down into 497.08, okay? So we definitely want to make sure that we understand what we're looking at, okay? Now let's look at really quick what's happening with Airbnb. So Airbnb, I pointed out on the weekend video, it's basically has these two bearish candle formations, and then basically we're going up and coming back down into this area. I think this is very similar to Disney, setting up for the same type of Disney type of action post earnings. Consumers are strapped. They're not going on vacations like this and buying Airbnb. They're not going to Disneyland. They're not buying Airbnb. At least that's my stance. And the charts are kind of telling you that it's not doing good. Okay, let's look at Amazon real quick. Okay, Amazon is forming a kind of a bearish formation on the daily, right? Basically, that was the weekend, and then we have this situation where it's kind of beginning to top out, right? I mean, we basically bounced up, and then we may be coming down. The RSI is beginning to form some divergences. You know, the MACD is still directional, but I could see this topping out. CCI is beginning to top out a little bit. And so, you know, you want to look at these Amazons, and if we're going to have a next leg down, we're going to basically see that, okay? On the ATR, we're at the top end of the range, we're rolling over. Accumulation and distribution is still on that downward trend. So basically, that's what's happening, okay? So keep an eye on Amazon. And then, of course, Apple, you know, what is Apple going to do after post earnings? Okay. So post earnings, Apple has been, you know, likely so. There's this big, huge gap. And it's just pulling back a little bit to support. Either it's going to find support here or we're going to continue to go into this gap area. And if we're at the inflection point and we're going to take one more bite at the apple to pull back and then just cleanse everything out for that summer rally, Apple's coming down. Okay, Apple is going to come way down in somewhere between 175 to 170 level in the next few weeks. Okay, so this is kind of the things that I wanted to talk about as we go over the inflection points. Let's go back on this this chart that I wanted to show you. So this is a what I call volumetric fingerprint chart. You know, don't worry about if you've never seen something like this before, but it basically melds the best world of you know, in an auction system, time and sales and everything, melds it into one. But I think we're forming a head here. Okay, and here's the left shoulder, maybe beginning to form this right shoulder, maybe come up. And so all of these areas really are unfinished businesses that we took out, but there's a lot of that stuff on the bottom here. And so what I'm saying is that we are range bound, and I think if we are truly at the inflection point, like I've been saying, you know, I was looking for this 52.25 between there and the 52.35, this area to be taken out. We got pretty close above there. So are we going to have one more bite at the apple there? Yeah, that'd be great as long as it doesn't go higher, right? That's probably for the summer rally, but this is what we're looking at this point. So we are at the significant inflection point. I wanted to take out the 52.25 to 52.35. Largely that has been done. It doesn't mean we go down tomorrow. It doesn't mean we go down today. Okay, but it does mean is that attention here, pay attention. These are where all the unfinished businesses have been done, taken out all the old pivots, all the old actions and buy imbalances have been taken out. But now what's below is unfinished business on the downside. Okay, because we're caught in that range bound fashion between 53.50, 52.50 all the way down to 49.68. That is something that you need to pay attention to. So here's basically what I'm talking about. On the weekend video, I talked about 51.50 to 52.25, right? SPY 512 to 520 is the level that needs to be visited. That's our inflection point before the next leg down can happen. Keep an eye open for this. So we're at major levels. The question is, will we fail to break out and retest the lows of this 50.35 to 49.68 level once more before resuming the summer uptrend? That's the question. And my guess is that there's a good chance of that happening. Okay. Not financial advice, but it's something that can happen. Watch for earnings distortion, especially something like Disney. And the next one that you can gain a lot of distortion is Airbnb, right? That's a B. Okay. So continue to watch Apple's reaction post earning. Is it going to continue to sell off, or is it a pullback before moving higher? Watch the commercial real estate market, especially watch Baidu and Baba. You know, there's something going on in China, and they report earnings next week. But also Apple, Amazon, Tesla, and Meta. These are basically going to be key. My key earnings are Affirm, Upstart, and Airbnb coming up in a few days. Folks, 52.25 to 52.35 is critical level. I mean, if we cannot close above there and we continue to stall there and spend a lot of time up there, we're coming back down and, potentially testing this level right here. Okay. So there's a lot of unfinished business down there. And so that's pretty much my set of videos. Thank you so much for watching. Subscribe, like us, share us, and comment. Okay. If you need to reach me, comment below or reach out to me at this address. Thank you so much. Bye-bye.